Hello, this is Ahura from Otis Markets. We'll be with you with a short review on global economic outlook in the week ahead, which is going to be the week number 29 in 2024. As always, before starting to see the week ahead, first we will check the last week to see what we had last week, and then we can review the week ahead and our expectations. Last week, the main focus was on inflation numbers from most developed economies, including United States, Europe, and other countries. Let's go one by one and see what we had the last week first. This is the economic calendar in the last week. On Tuesday, we had the inflation number from Mexico. At the same time, we had inflation number from Mexico. We saw, as you can see here, inflation increased a little bit more than expectations. On Wednesday, we had inflation number from China. The Chinese inflation number on the monthly scale increased by on the annual scale increased by 0.2%, but on the monthly basis, again the inflation fell by 0.2%. That's again once more shows that domestic demand in China is still a problem, and people do not have enough uh, interest in spending your money and go outside and go shopping. That's the main problem in China right now. The government and the central bank are thinking about the ways and stimulations, any stimulus, whatever that they can, any plan or whatever they can to give the people, to help the people to go outside and go shopping and start spending your money. That's the main reason that right now in the last weeks, so many people, so many analysts, they believe that China's GDP cannot reach its 5% expectations that they had at the very beginning of this year. Not on a Monday, sorry, on Wednesday, on Wednesday we had inflation number in Russia as well. As you can see here, the inflation in Russia increased by 0.6% monthly and 8.6% annually, which it was in line with expectations. Then on Thursday we had besides I will talk about the British data and also the Mr. Paul's testimony. Let's first with the inflation numbers. On Thursday, we had inflation number from Germany, which it was in line with expectation with no surprise. Then the surprise was in the United States, where the U.S. inflation fell by 0.1% in a month, in June, in a monthly basis, and lowered the annual inflation to 3% in June, which it was 3.3% in the previous month in May. Generally, the CPI and the core CPI, both of them, they were less than expectations and helped the central bank to think about cutting the rates in September. Now, the chance of rate cut in September increased more than 74%, which is again negative news for the US dollar and a positive for the stock markets. But that optimistic didn't last long, because on Friday we had a producer price index from the United States, and it shows that the producer inflation increased by more than expectations, 0.2% headline and 0.4% the core PPI increase in the monthly scale. And again, they warned the markets about the fate of inflation in next month. Besides that, we had Mr. Paul's testimony last week before Congress. As we talked last week about that, Mr. Paul explained that the inflation is in a way that they expected in the central bank, but now they have other risk in the market, especially in the labor market, and they have to think about the labor market as well. Most of the analysts and the market participants, they accept that, they read that as a signal of the dovish stance and the dovish policies for the next month and rate cut signals for September. That was what happened. And also last week you had a key report from the oil and energy market generally, AIA, IEA, and OPEC. They published their monthly reports. OPEC was a little bit positive about the the fate of inflation, the fate of demand in the market, but IEA they decreased their market demand, the overall global market demand by 1 million barrels a day, which it was a little bit, I can say somehow it was more contractive, conservative overview from the IEA. I don't think that's going to happen because right now what we see in the market, there is a two risk. Either the market is going to fall sharply, so then it will not be $1 million a day. It will be much more than this, or the market can continue increasing. We will not have something between. So this can be increase the oil demand much faster than what we have right now. That was what we had. These that and also last week we had. I should mention that last week we had a NATO meeting in the United States as well. Again, Mr. Biden disappointed his fans with many mistakes and forgetting the words and stuff like that. Which again is take that under question right now. That can Mr. Biden be the candidate, again acceptable or the right nomination for the Democrats for presidency or not? That again increased uncertainty in the U.S. economy, which can put the pressure on the U.S. dollar. Besides that, the last week the earnings reports also started. We had the earnings on Thursday and Friday last week from Delta Airlines and Pepsi-Cola on Thursday, and some banks on Friday. Let me see this week. Banking reports started. Yeah, JP Morgan and Wells Fargo, and Citigroup, they published their earnings reports on Friday. All of them, they were better than expected. But on Thursday, we had a disappointing earnings data from Pepsi-Cola and Delta Airlines, which they had a negative effect on the stock market on Thursday as well. For the weekend, we will check the charts together and I will show you the negative effect that it had on the charts. In the week ahead, United States will have very light week with mostly focus on retail sales numbers that we have on Tuesday. We expect a little bit weaker number, which can again be a negative news for the US dollar and put the pressure more on the US dollar and the stock market. Can get a little bit actually take advantage of this bad news, because that bad news means that the Federal Reserve will cut their rates. But generally, that's not a good news. So even if in the short term helps the stock markets, but it's not a good news for the stock markets. But in the week ahead, we will have the inflation numbers from many countries, especially from Canada. We're expecting to see a little bit lower inflation. We will have inflation numbers from Britain, United Kingdom. We expect to see inflation to increase a little bit more above 2%, to increase a little bit above 2%, as the last month it fell to 2%. We don't expect to see the again inflation number in United Kingdom at 2%. So a little bit increase from more than 2%, like about 2.2 or 2.3%, but it will be in line with expectations. But still, it supports the interest rate cut decision, possible interest rate cut decision of the BOE in its next meeting. At the same day on Wednesday, we will have the inflation numbers from Europe as well, from Eurozone as well, and we expect to see the inflation around 2.5% stable and not change for the headline, and core CPI at 2.9%, which again that will means that the Central Bank of Europe, which will have interest rate decision meeting on Thursday, will hold its current rate and the policies and will wait. They will have this stance that okay, it's better to wait for one more month and see the market effects of the previous decision, also the inflation rate and the labor market data. So that will be what probably be what we can see and expect in their statement. So they will hold their rates at the current level, but they will signal about the possible rate cut on September, what the United States also and the Federal Reserve United States also will do. Again, we will have the inflation numbers on Friday from New Zealand and from Japan. In Japan, we expect to see the inflation again raising a little bit around 2.5 or 2.6%. In New Zealand, we expect to see the inflation is falling after a long time holding the rates higher. Inflation probably in New Zealand will start lowering. So it will be somehow kind of just like the positive news for the New Zealand stock market. In United Kingdom, next week will be very important because I told you we'll have the inflation numbers, and after that also in United Kingdom we'll have the labor market data. We expect the unemployment rate. Where is the labor market data? We expect the here. So we expect the unemployment rate to stay at 4.4% unchanged, remain not changed, remain at the same level that it was previous month. And also we have the expectation, we have a little bit better expectation for increasing the retail sales in United Kingdom, which shows again that inflation, that economic condition in United Kingdom is a little bit better than European countries. That can help that can help the bond market in United Kingdom as well, and increase the bond markets in United Kingdom, as the most people they are going to sell their stocks. I mean, selling the stock in Eurozone is it has a more it's a more opportunity, more possible option than buying. But when you're selling this stock, when you're selling the bonds, you need some part of that to buy the bond, and that can go to the United Kingdom's bond. That's the most important news and data we have in the next week. But let's go and see the charts. What you're expecting with these numbers, what we are expecting to see in a chart. Let me share my chart. Here is the US dollar chart. As you can see, the US dollar chart, as you saw that with the data, with the numbers and data we had last week, an expectation of cutting the rates in the September, pressure on the US dollar index increased. We expect to see the US dollar index between 103 and 104 mark for the month ahead, especially as long as we don't have the personal income and spending numbers at the end of the month. But still, for now, we're expecting to see the 103 and 104 mark, something around this number for US dollar index. This little bit weakness US dollar index, especially, and also the possible here's a gold chart. Yeah, that we had this possible, the possible weakness in US dollar plus profit taking in the stock market can probably help this gold market. We can probably see the gold price to increase a little bit, especially from the technical point of view. You can see here that the gold still holding is 38.2% of its Fibonacci level right now. It's trying to stabilize itself around to 23.6%. And if so, then 2,450 will be the next target for this week, most probably. On the energy front, as I told you last week, we had this monthly reports of OPEC, IEA, and EIA. OPEC was positive, IEA was a little bit negative in its outlook, but generally right now what we can see here with the lowering the tensions in Middle East, especially between the Israel and Palestinian, we can see that the oil price again fell around $82. 82 is a very important K level. 60.8% of Fibonacci fan, and also it's very K support level. If it fell under $82, then we can see most probably the lower digits. But if the price can hold itself above the $82, we most probably can see $85 for the next week in the oil market, because there will be another news that can support this uptrend. On the stock markets, as I told the Thursday, we had a negative, a little bit disappointing reports. This disappointing reports with the fear of the higher rates and overpriced markets right now, the overpriced prices in the stocks, that led the many investors to sell their assets and help us put the pressure on the stock market price on S&P 500 to fall a little bit lower through 5,580. But later on a Friday, with the positive reports of the banks, but still at the same time the higher chance for the cutting the rate on September meeting, that helped the stock market a little bit to increase again. But still, as I told, the uncertainty in the election and geopolitical tensions most probably can put the pressure on the stock market. You can see this. You can see the RSI also around 52, and says that this trend right now doesn't have enough power to continue further with more strong. So that can probably see if the price fell under 5,580, then we can see probably lower digits after that. On the cryptocurrency market, that's I forget the exchange name, which was returning back to what was the name of this crypto? Let me find it. MTGOX is returning back. MTGOX is trying to return back the Bitcoins and Bitcoin Cash that they had, so it's more supply. But at the same time, the German government stopped almost selling its Bitcoins that they had from robbing and stuff like that. They got from the robbers and stuff like that. So the supply and demand somehow balance in the market right now, and we can see with more risk in the market, with past weaker US dollar index, again, the Bitcoin can help itself to go above 58,000. Still, this area between 57 and 62K, this area will be the side movement. If the Bitcoin wants to go higher or lower, it must confirm itself the price above 62K or under 57K. This is generally what we had in the market and what we are expecting for the next week. If you have any other question, please don't forget to write down in the comments. I'll try to get back to you as soon as possible. Have a good week ahead. Bye.